Yes, you
Hello.
can.
You can see the icon. This
Well, what we
space.
have now is your homepage. Okay, now we have the icon thing.
Okay, thank you. God bless. Okay, let's review the question together.
Question what,
This
please?
question one.
Okay.
Okay. Pelumi, how are you?
I'm fine, sir.
So you heard me and you did as if you not here. Okay, now let's look at question number one. November 2025. So for those of you that we have had interaction together before now, you would know that I've always told you I can like to make noise in question number one. And what is very important is that you need to always be conscious of the fact that all these things that ICANN will be asking you, it is what you have been taught before now. We have taught you everything. It's just that they will put a lot of introduction that will distract you. My online student, you remember that in our last class, we did a question, I think May 2024, thereabout, or November 2024, where I showed you that a lot of information that you have in the question are not relevant for the question. They are just like introduction. So examiner would always like to introduce question to you. They would introduce it. They will give you many contexts into the question. Now, it is now left to you as a student to identify what the examiner is asking, especially when it comes to case study. Now, for case study questions, what is important is the principle behind it that you already know. Now, any case study question that the examiner is going to be testing would always be in a background of a particular topic. So they can't set a case study without linking it to a topic. Now, and I've also said that your question number one in your exam is always on company's income tax. So, and that is why you will see the pattern of our lecture. We would have taken you basis period. We took you adjusted profit. We took you loss relief. We took you capital allowance. Then we jump into company income tax perspective, where you're going to be seeing every dimension. And I'm very sure for those of you in my sort of center, Mr. Wasiu Olonode would have told you we have 4 ways in which companies are assessed to tax. I have taught the VI student and I've also taught the online student. Number one way that a company could be assessed to tax, company could be assessed to tax on the dividend. On the dividend, company could be assessed to tax on turnover. Company could be assessed to tax on their total profits, okay, which is this scenario that we're going to be looking at. And company could also be assessed to tax on minimum tax. Now, in my last class, I have explained all this for those of you in my VI and the solo students, and online students. But I'm very sure Mr. Wasiu Day too would have explained all these things to you in your class. But even if he has not explained it, just follow me. You are going to be good with me, okay? So let's look at this question. You can see that page 1 is just introduction. Let's go. Page 1 is just introduction. So, Razor Company Limited is a Nigerian company incorporated in 2014. The company commenced business in 2015. That is the date of commencement, 2015. As a major distributor of hair relaxers for women of all ages. For women of all ages. The company's accounting year-end run from January 1st to 31st December annually. So they are using style to tell us the accounting year-end of the company. On June 3rd, 2025, the company submitted its 2025 financial statements, and the relevant tax authority and relevant tax return to the tax authority on Promax. Okay? During the next review of the relevance of the tax return, Tax Manager 1 of the TA, that is, of the tax authority, discovered some anomalies in the tax return. So these were considered incomplete. That is, the tax return were considered incomplete. The company was asked to provide additional documents. And also offer some explanation in respect of the gaps noticed in the returns via a letter reference. They put reference number on the letter. They put the reference number of June 28th, 2025. The company failed to offer timely response, which prompted the tax audit department to send a notice to conduct audit exercise to the chief executive officer of the company. Now, that means this company had failed to comply with the law. And because they have failed to comply with the law, they are supposed to have responded. They did not respond. And the fact that they did not respond, here the tax authority wants to investigate them. The tax authority has now sent a letter through the audit department of the tax authority to them. Now, as you are reading this question, something will be coming to your mind that this examiner might want to ask some question on tax audit and tax investigation. That will be coming to your mind. Mr. Idris had taught you tax audit and tax investigation. So this is it. That's why the letter of intent for tax audit reference was dated July 29, 2025. The TA pleaded for a copy of the management and staff of the company on the audit exercise to be carried out in the tax authority's taxpayers' premises between August 20 and September 2025. The field audit indicated the material overstatement of expenses and capital allowance over the year. The understatement of over 50 million for the 3 years. Now they have been understating their profit. That's what they are saying. And this has resulted into a shortfall of 50 million in tax payable. So whether that is right or not, we are going to see for the 3 years. These findings were communicated to the company's management. The restaurant of the company on for many years. So an investigation into the affair of Razor Company Limited was initiated. Investigation was initiated. Why? Because they noticed that this understatement has been going on for so many years. One of the reasons why a company might be investigated is because of this kind of situation where they are understating their profit and is now making the company pay a lesser tax liability than expected. Then an investigation can come up. The tax investigation was fixed on October 30th. The chief executive officer of the company recently appointed your firm, Babs and Co. Chartered Accountants, as a new tax consultant and handed over to you all correspondences received from the TA and financial documents that may be of assistance. That may be of assistance in discharging your duty. The chief executive officer does not understand the enormous tax ahead and what tax audit and investigation entails. He merely thought that the tax official can be persuaded and talked to. His intention was to take the TA that the tax authority to court if they refuse to accede to company's request. Okay? While reviewing the financial records and tax of the company, the following information came to limelight. You are given this. Look at the information. This question is very simple, but they gave you 3 years. They gave you gross turnover. Now, whenever you are given gross turnover, one thing that I've always told you is that, number one, the gross turnover wants to show the type of company the company is. In this regard, this company is a large company. This company is a what? Is a large company. Okay? Now, what is a large company? A large company is a company with turnover of above 100 million. But this is not the issue we are looking at now. The issue we are looking at, whenever you have a turnover in your question, is that you must also check for minimum tax. In my last class, I told you, except if the examiner now says ignore minimum tax. If the examiner did not say ignore minimum tax, we are checking for minimum tax. Okay? Now, the examiner says, they gave us turnover for 3 years. They now said the turnover was arrived at after deducting the following. Sorry, the operating profit was arrived at after deducting the following. That means they have deducted some things before arriving at the operating profits. So let's go ahead. The first one is depreciation and amortization. We all know that depreciation is not an allowable deduction, right? Abby? They are not talking.
Yes, sir.
Good. Depreciation is not an allowable deduction. I can't see it again, no. Can you see my screen?
Yes,
okay.
back.
Good.
Now.
Donation to social club is not allowable, right? We all know that.
Sir.
We also know that provision for asset impairment in tax, I've always said it, provision is not an allowable deduction. So provision for asset impairment is not also an allowable deduction, right? The next one, stamp duty on increase in share capital. Any form of tax liability is not allowed, especially when it comes to stamp duties. Stamp duty will not be an allowable deduction. So it is not allowed. Okay?
Sorry, sir. Sorry, sir.
Yes.
I thought that we learned that if it was stamp duty on okay, am I mixing things up? For example, like because it says it's a share increase share capital, we're supposed to capitalize the stamp duty.
Yes. Do
Huh?
you understand? Stamp duty is capitalized. This bastards. Stamp duty is not allowable. So just take it as any form of tax is not allowable. Now, the only type of tax that is allowable is stamp duty, is VAT on expenses.
Yeah.
Sorry, you are hearing noise at the background. I'm on my way somewhere. So stamp duty on expenses is not value-added tax on expenses is allowed. Any other tax is not allowed. Okay, so let's go. Rent, long lease. Is that allowed or not allowed? Is that allowed or not allowed? Long lease.
Not allowed.
Not allowed.
Thank you. Now, the next one. Unrealized loss on foreign exchange transaction. Allow or not allow?
Not
Okay,
allowed.
Not allowed.
When you see unrealized loss, it's not allowed. Okay, what about realized loss?
Not allowed.
It is allowed, my sister. Realized loss is allowed, while unrealized loss is not allowed. The same way unrealized profit will not be taxable, realized profit on exchange will be a taxable income. Okay? Let's go to the next one. So that means that one is not allowable. The next one, traveling expenses. Incurred. Traveling expense incurred for the director's relative. Is it allowed or not allowed?
Not allowed.
Not allowed.
Ah, my student, your head is there. It is not allowed. Okay. Investment allowance on motor vehicle. Is it allowed or not allowed? It is not allowed. Okay. Other information made available to the company. Prior year capital allowance computation and asset register were as follows. Now, look at these assets. We are given tax value of the assets. We have plants. They gave us that right. So they gave us that plant has a terminal value of 10 naira. What does that mean? What does that mean? When you are given that plant has a 10 naira terminal value,
That means that
mean?
allowance for the value. Yes. Like
that is emotional value. It has used its full life. Abi?
yes.
There is no other allowance that will be calculated on that. Okay? So that is that. Now, in fact, the examiner now still help you, right? Left. The examiner now still help you by saying that we have 0 remaining years. That means it has used its useful life completely. 0. It doesn't have useful life again. The next one, stress. The next one, they told you the number of items, 1. That means that item is 1. The next one, motorbike. Motorbike has a terminal value of 164,000 with 2 years remaining. How many years has gone? How many years has gone?
3 years.
2 years has gone.
Is motor vehicle 4 years?
Yes.
Oh, okay.
2 years has gone. 2 years remaining. Abi? The next one. Office/solar equipment. 525,000. 3 years remaining. How many years has gone?
1.
1. Good. How many is this equipment? 4. The next one. Furniture and fittings. For furniture and fittings, we have 480,000. How many years remaining? 4. How many years has gone?
0.
1.
0.
1. Olodo.
Ah.
1.
So you said 4
Furniture.
years, man.
Wait, initial allowance for furniture, is it not 25%? Is that not 4 years?
Is 20%.
Furniture is 20%.
Initial allowance is not used to calculate number of years now. Is it
Sorry,
not
annual allowance, sorry.
So annual allowance is 20%.
Annual allowance is 20%.
Yeah.
Oh, okay. That was 25.
So these are the things that you need to know in the exam. But don't bother yourself. Don't say, I want to cram. Don't cram anything. Examiner will give you the rates at the back of the question. If I open to the back of this question, look at the rates. The examiner will put the rates. So let's go and look for furniture and fitting. Furniture and fitting. See, it's the last one. Furniture and fitting, 25-20.
20.
Do you understand? So you do not need to bother yourself by cramming it, because examiner will give you under examination condition. Okay, let's go back to our question. So they gave us additional assets. So they said addition. So the first addition, they gave us plant and machinery. Okay. They also gave us motor vehicle. Look at the date of acquisition. 2028.
Sir, please, I have a question.
Yes.
What does office solar equipment fall under? Hello?
Office equipment. I've answered it.
Okay, sir. Thank you, sir.
All right. So, any other question? So, look at the next one. So, they gave us plant and machinery was acquired, motor vehicle was acquired, office solar was acquired, furniture and fitting was acquired. They gave us at different dates. Straight up. They gave us at different dates. Okay? At different dates. They gave us at different dates. So that means the assets that were given they were given to us at a different dates. Assets were given to us at different dates. Assets were given to us at different dates. So that means we need to also do our assets allocation schedule. Yeah. Our assets allocation schedule. Okay? So that is that. Now, look at what the examiner is now asking us. Look at what the examiner is asking us. Examiner says, number 1, write a report to your clients and advise them on the following. Advise the company on the following. Okay? Advise the company on the following. Number 1. Number 1 of the advice is the revised total profit and tax payable. Revised profit and tax payable. That's number 1. For the relevant years. How many marks? 24 marks. It's 24 marks. Okay. The next one. They said list the objectives of tax audits. To your right. Objective of tax audits. Objective of tax audits. Enter here now. And objective of tax audits. They said objective of tax audit, and they now said distinguish between tax audits and tax investigation. 3 marks. That is what? Now 30 marks. That's 30 marks. So that is where we are now. Now, what we need to do now is now to go and solve the question. Okay? So let's solve the question. I won't be able to show the screen again, or you'll be the one that will be directing me. Okay? So that is that. Wait. I'm going to go and pack.
Apologies, sir. Please, what question is which year question I joined
November.
late?
November 2026. November 2026.
2025, sir.
2025. We have not
2025.
gotten to 26 yet, Mr. Cruz.
Marcelo. So what is it? More class. Hold on, guys. Pack here. So I'm going to stop sharing the screen now so that we can look at the question. Okay? So you be the one that will be reading the question for me, because I won't have it again. Are we ready? Okay, let's go. So I'm going to be projecting my whiteboard now so that we can solve the question.
Mr. Chris, can
Yes.
you say, are you able to save the notes when you are done and share with us on the group?
Yes, I will save the notes. Yeah, no, so what you will do, I'll show you. So you see what I just clicked now? These 3 button, you will click it, okay? You will now click export. But don't worry, my online student knows how to do it. They will share with the class.
Okay, good. Thank you.
Okay. So the first thing I'm going to do in this question is to do my asset allocation schedule so that we know when I'm going to introduce them for the purpose of capital allowance. This question is very simple and straightforward. It's a very simple question. I don't know why now will be setting this type of simple question for you guys. I will query them. I'm giving you a simple question. Okay, let's do the asset allocation schedule. Please mute your mic. They said we should prepare, what was it called? They said we should prepare, they said we should prepare company income tax for the relevancy of assessment. The relevancy of assessment in this question will be 2023 to 2025 year of assessment. And any asset allocation that they are earning, capital allowance that we're going to do will also be in that direction. So I will say tax year, basis period, and QC. Okay, mute your mic if you are not the one. You are not the teacher, and I'm the teacher. In 2023, our base period will be 1/1/2022 to 31st/12/2022, because we are adopting preceding year basis. 2024, 1/1/2023 to 31st/12/2023. 2025 will be 1/1/2024 to 31st/12/2024, right? Now, we're not going to be looking at the assets that was acquired that fall within this period, right? Now, let's go back to those assets. They told us that we have an asset that was brought down, that is brought forward to 2023. Abi, that taxing down value is brought forward to 2023 year of assessments. What does that mean? It means it should be introduced in 2023 year of assessment. They said brought forward. Examiner everybody puts brought forward, so that you will know that that asset will be in 2023 year of assessment. Okay, so all those assets that they give us their taxing down value will come to this place. They said plant and machinery, furniture and fitting, solar, motor, right? So those ones should be introduced. If the examiner had just put taxing down value, okay, and they put 2023, it means it is at the end of the year. Was it the question we did last week? For those of you online students, you remember how I explained that taxing down value that we were given. So it's the same procedure, okay? Now, the next one, they told us they acquired some assets on different dates. So what are the dates that the assets were acquired? Give me the first one.
March 31st, 2022.
Oh, March 31st. That means that one will fall here, Abi. That's how. What asset did they acquire?
Motor vehicle.
Okay, I'll say motor vehicle 2. So that's Any other one in 2023, 2022?
No, for 2022.
We're closing that. We go to 2023. Any assets?
Yes.
Office and solar equipment.
Office
and solar equipment.
Okay. Solar 2. Any other one?
No, sir.
Which one? You are not talking again, no?
2024.
Which asset was acquired?
In 2024, asset that was acquired, motor vehicle.
Motor vehicle again?
Motor
Yes.
vehicle, yes.
Making 3
And
motor
furniture
vehicles.
and fittings.
Yes.
Furniture and fittings.
Furniture and fittings.
So we have 3 motor vehicles. How you are saying?
There's September 31st, 2024. Office and solar equipment.
So we have 3 solar equipments. Is that what you are saying? You guys are not talking now. Should we are doing this spell together?
Solar equipment is two. Two solar.
Yes.
From
Yes.
tax written value, it is 3.
It is 3. Okay, no problem.
Yes, 3.
But let me leave my screen. You have taken over my screen. But let me leave the screen. You are the one presenting now. I should be the one. Pelumi, stop playing my screen. So we have 3 assets. 3 solar. We have 3 motor vehicle and 2 furniture. Okay. The question we are doing is November 2025. Okay. Now that we have done with that, we can now go and compute our capital allowance, because what is going to make us get this question wrong is if you don't get the capital allowance appropriately. So what is the name of this company? You write the name of the company. I don't know the name of the company now. I put as a limited. So I will say,
Laser Company Limited.
okay, computation of capital allowance for 2022 to 2025 year of accessories. So I would assume that we only have 4 assets because I will merge all the other assets together.
So where is the capital allowance from 2022?
Why is it from 2022? It's not from 2022. They told us balance brought forward to 2023.
Yeah, but you wrote 2022.
I did not write 2022. Oh, sorry, 2023. 1, 2. I have not used my hand for batting. See how straight my hand is. So what's the first asset? Plant and machinery. The rate is initial allowance and annual allowance would have 50 and 25. What's the next asset?
Please bring your board up. It's down.
Furniture and fitting. That would be 25, 20. The next one is solar equipment. 50, 25. The next one is motor vehicle. 50, 25. And capital allowance. Okay. Now, in the first year, which is 2023, 1/1, 23 to 31st, 12, 23. Tax now value Tax fixing now value. This guy is 10. Abi, you remember? What about the remaining one? Furniture and fitting. How much is furniture and fitting?
4.
4.
That's the
4.
basis period for 2023. You said 1/1/23 to 1/12/23.
No, 1/1/22. 1/1/22. It's 1/1/22 to 31/12/22. So, what is my furniture and fitting value? Give me value now. What is the value of furniture and fitting? Tax now value.
480.
480. I don't have the question, so you have to be calling the plus for me. The next one, solar equipment.
525,000.
525.
525.
Yes. 525,000.
The next one,
F and F. Oh, okay, written.
motor vehicle.
1.640.
1640. Abi?
Yes,
Yes,
sir.
sir. 1,640,000.
So let's go. On that, we'll calculate annual allowance. But before we calculate annual allowance, did we acquire any new one? Yes, we acquired new one this year, motor vehicle 2. So cost. How much is the cost that was acquired?
10.6.
On the new one fire, we will calculate initial allowance on it. So 50% of that is what?
5.2.
This can be 5.2 now.
1.2.
Yes.
5.2.
Sorry.
AA. No AA for this furniture and fitting. But this plant and machinery, how many years left? They told us that time. How many years left?
4 years.
Divided by 4, that is 120. Abi?
Yes, sir.
How many years left for this furniture, for this solar? How many years left?
1 year.
1 year?
4 years.
4 years. Divided by 4. What do you have?
No. Solar
It's
is
3 years.
It's 3 years now. 3
3.
years.
3.
Divided by
Sorry, 3.
how
It's
much is that?
it's 175. So
175.
Yeah, please, I don't
Explain it.
understand.
You don't understand again. Have you got that
Yes.
allowance before?
Yes, sir.
So what is it that you don't understand?
The remaining 3 years, you're dividing it by what? I don't understand what you're saying. Divided by
Are you my in VI or
VI.
VI? Who is that?
Yvonne.
Yvonne.
Yes, sir.
Yvonne,
Serena Williams.
be careful. That man
Sir?
Serena Williams, be careful. Be careful. Why will you say you don't know this? How many years is left?
3
The examiner
years.
told us that it is 3 years left. So, to get your annual allowance, what will you do? It is, you will say actually now value
Now value over
divided by n minus
n minus number of years. Yeah.
n
Okay.
is the number of years, y x is the number of years. So, they have used how many years before now? Possibly 1, I don't know. So we'll just say what is it? So what you are using for July is the remaining number of years. Say I you and what we are using this for is the remaining number of years.
Okay, sir.
Please, I need clarification. In the question, we have number of items. What does that number of items mean? So I guess maybe if we have the tax written down value for each, for instance,
Hold on.
Sorry, please, what page is the question?
122 of the November 2025 can find that.
Thank you so much.
It's November 2025. Okay, let's go ahead.
So I have a question, please.
Okay, go ahead with your question.
In the question, where we have the tax written down value of existing assets, so there's a number of years remaining, which is okay, which is clear. But what's the number of items? What does it mean? Is it that in plant and machinery, 1 is underneath, motor vehicles is 1, furniture and fittings is 10. So what does that mean?
The implication of that is that I told you that you have 10 per assets. So in the last year of use, if you are told asset 2 years, 2 assets, if they put 2, that means you are going to retain 20 naira. If it has 4, you retain 40 naira. That's what it means. Do you understand?
Okay, it's clear now. So for the furniture and fittings, which is 10,
Yeah.
100.
No, for the 115 years, it is not 10, it is 1. Sorry, it's 10. Yeah. That will be 100.
Okay.
So we're referring to plant and machinery. That will be 100. So let's
Thank
go
you.
ahead. Serena, do you understand it now? Okay.
Yes, sir. Yes, sir.
Good. This one, we have 2 assets. This and this. We have to allowance separately. So to calculate the annual allowance, let me put it somewhere here. We are going to your cost minus initial allowance divided by n plus tax union value over n minus s. Okay, Sorry, this is not for me, but just explaining. So this is going to be on the new assets, and this will be on the old assets. On the new assets and the old assets. Now, how much is the new assets? The new assets this question is 10,600,000. 10,600,000 minus 5.3 divided by 4 years plus 1640. How many years left for these assets? How many years left? For the old one, how many years is left?
2 years.
I can't hear that.
2 years.
2
2
years.
years. So I'll divide this by 2. So give my, so this is 5, this, divided by 4 plus 164, divided by 2. Give my value. What is my annual allowance?
2,145.
2,145,000.
Yes, sir.
Is it 2,145,000?
Yes, sir. 2,145,000.
I'm lost. Which asset are we talking about?
This is multiplied. Please go. I need it. I need it. Yeah. Do you understand that? So I'll bring that value here. Add it. Add it up. So what do you have when you added it? Rest.
2,000, 2 million, 2,440,000.
Now for the two of you in this class, they are not talking.
440,000, 2,440,000.
For
40,000.
440. So you add this together all the year.
7,740,000.
7 million.
740,000.
Now we are 740,000. So move on to the next one. In
Sorry, is motor
2023,
vehicles 2,145,000 or 2,140,000?
so what is the value? You guys should call the right value for me. I don't like the
I
value.
think it's 2,140,000.
It's 2,000,000.
Okay.
It's correct already.
This 2,145,000 is correct. Is that what you're saying?
Yes.
Yes, sir, it's correct.
Okay. So let's go ahead. So the next one is
Tax written down value.
give my tax written value. 10. Have you?
Yes, sir.
360.
360,000.
What about this
350.
guy?
350,000.
Uh-huh.
4,795,000 naira.
Good. Now, did we acquire additional asset this year? Solar was acquired. Have you? So that one that was just acquired, you bring it in. How much is it?
5,960,000.
One.
5,960,000. 960,000.
So on that, you calculate your initial allowance. So what do you have? 50% of that, what is it?
2,980,000.
So AA, nothing. AA for this one is constant, 120,000. Have you? Now, this is additional one that we have acquired. So I will come again and calculate. So 5 million, 9 something, 9 what? 96.
960,000.
Subtract 298,000 from it. Well, 4 plus 350 divided by 2. So what do you have?
920,000.
Plus the 350 divided by 2, what do you have?
920,000.
So you have done these two together. You have 920.
Yes, now the first figure is 745,000.
Okay, thank you.
745 plus 175. That is 920,000.
So this guy is constant. You don't need to calculate anything. So what do you have when you added it?
Sorry, sir, please, I have a question.
Yes.
So,
I'm
for
listening.
for the new assets that were acquired, I thought we were going to prorate based on the date of acquisition
Who is
for the
that?
annual
Who
allowance.
is that? Who is that?
Is
Who is
Laura,
Laura?
sir?
Okay. Why are we prorating, Laura? I have taught you this online. Why are we prorating? The only situation where you prorate assets is when the number of months in the basis period is less than 12 months. It is the basis period that determines what we do, not when the asset was acquired. Basis period will guide to the right number of months we are going to use. And when you look at our basis period here, is any one of it less than 12 months? Answer
No.
one. So if the any one of it is not less than 12 months, we will not prorate your initial allowance, your annual allowance. Note
Oh,
that the only situation where you prorate your annual allowance is when the company just commence operation and the basis period is less than 12 months.
okay.
All right.
All right. Thank you.
You're welcome. So
3
what do you have when
million.
you added 3
3
million?
million 185,000.
Add the two together, what do you have?
6,165,000.
The last one, 2025. Tax nominal value, 10. We acquire, yes, right? Okay, acquire machinery again. But we acquired motorbike 3, we acquired furniture 2, and we acquired solar 3. So let's bring them in. Give my value. My tax nominal value for this one will be 240. What is tax nominal value for this one?
Two million, 410.
2 million
410. 410,000.
410. What about this?
2,650,000.
Don't forget that how many years was this one? How many years are you supposed to use? This first one. They told us the number of years remaining that time. How many years? 2 or 3?
Three years for solar.
3 years, have you? So,
Yes, sir.
good. If they said 3 years, when you got the 164, 1,640,000 divided by 3, what did you have?
No, sir. Sir, for motor vehicle, it's 2 years left. For solar, it's 3 years.
I just wanted to confirm. So when you do 1,642,000 divided by 2, what do you have that time?
We have 820,000.
820. Have you?
Yes,
Now,
sir.
so this is year 1 of that. Yes. Now, this is the last year of use of that asset. This should be reduced by how many is that motor vehicle? This one.
1 year.
No, how many is the motor?
1.
1. Okay. That means we have to retain it. So on assets, I'm going to retain 10M. So on the old one. So that means my annual allowance I recognize here should be less by 10. So if that's the case, I will have so that in this case I will have because this asset is supposed to be 2 years. This is let me read to you on a separate sheet so that you understand what I'm saying. Let us assume that asset came all alone. We have this. This is tax down value. They said 2 years to go. So I divide it by 2. I have 820. My tax down value now is 820. Abi, this is the last year of use. You must retain 10 naira. So this will be 819,990. So on that asset, I have 10 naira. And don't forget that that asset, we merge it with the new one. And in that my new one, I have 10,600. Abi, that 10,600, I calculated my initial allowance, I have 530, 5.3. And now said, oh yeah, get me my annual allowance for this new one. What is my annual allowance? For the new one, what is my annual allowance? 5.3 divided by 4. What do you have?
1,325,000.
3
25,000.
325. So if you add the two together, we have 2,145. That's how we got this guy. So subtract, what do you have? When you subtract this from this, what do you have? Give me my value. I just want to show you something. Give me my value.
So what figures are coming again, sir?
10 million minus 5.3 minus 1,325,000. What do you have?
$3,975,000.
Abi? Now, this is a next year. I'll still have this. So you will now have 2,1,499,990. That's what we have. But what is your tax now value here? Do we have 2,6,5,1,2? This is tax now value. Abi? So if you add the two together, I mean this, you have 2,5,010. And that is what you have here. Do you understand what I'm saying? What I've just done here is to take the old assets and the new assets. I did them separately so that you can now actually see the effects of this 2 years that is remaining. So the first time that we did it, we have 1,640,000 less the annual allowance. We have 820. You have 820, and you remember in the last year of yours, your AA in the last year of yours, you are returning now value minus 10 naira. This is your A in the last year of yours, and that is how you have this your A. We have done this before in class, so
So how did you get 820?
Okay, they told us that the assets have 2 more years to go. Divided by 2, we have the 820. Do you understand that?
Yes, sir.
Good. So do you understand why I had to do it this way? So that we can see the effect of that residual value of 10 naira. That's why I have to separate it for you so that you can see how we got this 2,650,010 naira. Okay. So they acquire some new assets this year. They acquire some new assets. They acquire solar, they acquire furniture and fishing, they acquire motorbike. So, motorbike that was acquired. So, let's go with the first one. They acquire furniture and fishing. How much is furniture and fishing that was acquired?
720,000.
720. What about solar?
3,160,000. 160.
Okay. What about motorbike?
9.5 million.
On these new ones, I will calculate initial allowance. My initial allowance for this will be 25% of 720. What do you have?
180,000.
180. For this one, 50% of this.
1,580,000.
1,000,000.
580,000.
50% of this.
That's 4,750,000.
So if I add everything together, what do you have?
6,510.
I can't hear that.
6,510.
6 million.
510.
Now, AA, that is where our challenge is in this question. AA. So in this question, they acquire additional one for furniture and fixing. How many years do we have left for furniture and fixing? So for furniture and fixing, when we acquire, they say 4 years left. So this is 1, 2, 3. So we are not going to the last year of this. So what I'll just is to take the annual allowance of the previous one and add it with the annual allowance of the new one. So what is the annual allowance of the new one? The annual allowance of the new one will be 720,000 minus 180,000 divided by 5 years. Furniture. So what do you have?
108,000.
I can't hear that.
108,000. 108.
108. That 108 add 120,000 to it. What do you have?
228.
Next one is
Please
how
take
many
the vote
years?
up, sir.
You said, how many years is solar supposed to use at the beginning? They said solar has 3 more years to go. Abi?
Yes,
This
sir.
for solar. That means it has gone to the last year of use in this place. So we must retain 10 naira. So I will take the old annual allowance, which is 1,580,000 minus 10 naira plus the new annual allowance. They just acquired this new one. This 3,160,000. 3 million less the initial allowance. 1,580,000 divided by 4 years. So what do you have? We have 157,999,990 plus. Give me the
That one is 395,000. 95,000.
add it together. What do you have?
1,974,990. So for the first one, you wrote 1,579,999.
Is it not correct?
You wrote, yes, sir.
So what do you have? $1,000,000
$974,990.
974. Have you?
Yes.
But how many is it solar that time? How many was it? The first one.
It remained 3 years for solar.
How many? No, how many is solar? How many items? Number of items.
4.
So
Four items.
we should have removed 14 naira from this. So this will be 60. Do you understand?
Yes, sir.
So next.
Sorry, sir, I have a question.
Yes, right.
For this solar, why did you remove 40 naira from the 1580? I thought
Items
that
they
was
buy.
the initial allowance of the new one.
Yes. How many items they buy that time?
No, that's not what I'm saying. Like you're removing 40
Why are
naira
you calm
from
down?
month 580.
That's what I'm asking you. How many assets was bought? How many solar panel was bought?
There were two.
The number of
4.
items under the terminal value, 4. And that's
Yes,
the
but
last year. Right.
I understand that one. I'm saying, why are you removing it from month 580 and not the allowance that it
Why am
was
I?
before? I don't know
Because
if you understand what I'm
the annual allowance, no, I should remove it from 920. 920. I should have brought 920 here.
Yes, that's what I'm asking. If that's
This
correct.
should be.
That's correct.
Thank you for that.
Sorry, sir, please. I did not understand that, sir.
But I thought we bought
The
new
annual allowance,
assets in
920.
20.
I went to take initial allowance 919,960. Add it all together.
One million 314,960.
For this one, we also acquired new one, but thankfully, it doesn't have any impact on us. I already calculated the annual allowance. So I'll just see 132 plus the new one. The new one is 9.5 million minus 7,450 divided by 4 worldwide. What do you have? You understand this one? This is the old asset. This is the new one. What do you have?
Two million 512,500.
3 million.
2,512,500.
So sorry, sir, but how do you get that old asset figure?
How did I get?
The 1,325,000.
We calculated it here that other time.
No, sir.
We said cost 10 million 600 minus 5 million 300 divided by 4 on that new assets. Our constant annual allowance is 3 million 250. or 3,000,000 to 1,325,000. So that is how we got this value. So what do you have? Said you have 2,512,500. Add everything together. What do you have? What do you have?
4,055,046.
0.55.
0.46.
You are looking at the solution.
No, sir, no, sir. I'm calculating it, sir.
What is 0.46? We have 0.46 anyway.
That 131 for 0.96. Yes, sir. It's 0.46.
So if you add everything, what do you have? What do you have?
Then 565, 460, 490.
Sir, it's 0.46, not 0.49.
I put it back in top.
565.46.
Are we? So summary.
Sir, it's 565. 10,565,46.
565.
Yes, sir.
Hello, good afternoon, sir. Hello, sir. Hello, sir. Ah. Hello,
Good
sir.
afternoon.
Good afternoon, sir. The solar equipment, this is not supposed to be 1,314,990.
Good afternoon. Can you hear?
Sir? I said the solar equipment, the annual allowance for the third year. When I calculated my own, I got
I can hear.
1 million. Okay, sir. Yeah.
I'm asking you, why
I
will it
can
be
hardly hear you,
990?
sir.
That's what I'm asking.
Sir?
Okay, I am saying, why will it be 990?
Okay, on the first two assets, no, we are charging 920 initially, but at the end of
Why
the
will
third
it be
year,
990?
on the first two assets, we are charging 920
Okay,
initially. So
my
at the end
sister,
of
hold
the
on, hold on.
yes,
The
sir.
first solar panel that was bought,
Yes, sir.
how many items was bought? How many they buy?
Uh, um, 4, sir.
4.
Yes,
So,
sir.
and each of it, you must have a written down value of how many? 10 times 4, 40.
Okay.
This is how you have this. Instead of having 990, you cannot have 990. You have 96.
Okay.
So this is your summary of your
Yes.
capital loss. So let's now go to the question. So let's
Yeah.
compose the company income tax. of companies. The examiner deliberately did this to make the capital allowance very difficult so that it will waste your time in the exam. You can see that we have used almost 2 hours to do this question. That's why I always advise when you have this kind of question, do it last. Don't go and put it as your number one. Do other ones and come back to this and concentrate on this. Of company income tax for 2023 to 2025 years of assessment. So let's go. Another thing that we need to do before we do this is for us to compute our adjusted profits for those years. So that we can just pick it directly. So let's say XYZ Limited computation of adjusted profits for 2023 to 2025 year of assessments. So we have 2023, 2024, and 2025. Right? So operating profits. So let's go. Our operating profits is what? How much are operating profit in the first year? I can't hear that.
160,000. 160,600.
Like this.
Yes, sir. Sir, those figures are raised in thousands.
The next one. The next one.
195,000. 195,800.
The next one.
195,800. 260,400.
So,
Sir, for 2024 is 195. 195,800.
add and deduct. Let's go. The first one in the question that we're given was the first
Depreciation.
depreciation for the 2000. 62,000 and 63,000. Donation 2.6.
I can't see one.
You can't see the screen again. 4.8. Can you guys see my screen?
Yes, sir. Yes, sir. Scroll up, scroll up.
Impairment 432 and 19. Stamp duty
36, 2025.
dash dash and 36. The next rent long list dash dash 16.8. 4 years lost. 22 dash 15. Investments dash other add. Figure. What's the addition of all this? Addition of all this. Addition of all this.
For 2023, 51,
Yeah,
51,000.
51.
Yes, sir.
Add it to the profit. What do you have?
That is 11,000.
The next one.
57.1.
What do you say you have?
57.1.
67,100. Add it to this one. Add it, what do you have?
7.1.
I can't hear you again. 2.
100.
I didn't hear that.
6 to 900.
269.
26 to 900.
Like this.
Yes, sir.
What
The
about
third
this
one
one?
is like 97.56.
Eh?
97.56.
When you added this, what do you have?
357,960.
Okay, now that you are passing the numbers, we can go ahead and introduce them in our. So let's do summary of that one. Adjusted profits. Capital. The first one, 211,600.
211,600.
The second one,
262.
262. 262 what?
900.
The last
Nine
one.
nine five.
26 to 900. 357, 960. 960.
1 or 9.
960. It's correct, sir.
Okay, now we already know it. So we can move on to the next one. So, what is my in 2023? I have 2022 to 31st 12. 2022. Adjusted profits. Don't forget, it's in thousand. It's in thousand. You have 211,600. Convert this one back to thousand. The capital allowance for the year. We have 7,740. Relief for the year 7,740. Carry forward. So total profits will be what? So company income tax, tertiary education tax. Now this is 2023. What is the tertiary education tax for 2023? I think that's 2.5.
2.5.
Yeah, so we'll use that.
Total profits. Total profit.
Yes.
Total profits. 203, 860.
273.
203, 860. 203, 860.
860. So
Yes, sir.
30% of that, what do you have?
61,158.
The second one, accessible profits. 2.5% of the accessible profit. What do you
1,529 approximately.
1,052.
No, sir, no, sir, no, sir. It should be on adjusted profits. 5,290.
5.
5,290.
In 2024, accessible profits. What do you have? 269, 262.
900.
Capital. What's the total profits?
But I think
Two, two,
I
Two
think there's
what?
a mistake. No?
2,735.
2.
2,56735.
Company income tax at 30% of
Sorry,
that.
sir, I made a mistake, sir. Hello, sir.
Where
We
did
forgot
we
to
make
add
that?
back. We forgot to add back the traveling expense that was not alive.
You didn't tell us, so don't go.
Sorry.
You will be adding it yourself. So tertiary education at 3% in that year. The next one is 2025. Please add it to yourself with that one that you just told me about. Just 375, 357. Nicest. Ten, 5, 6. Relief for the year. 10, 5, 6. Carry forward. 10, 5, 6, 5. Total profits. Whatsoever you have, on that you calculate your company tax, 30%, and your tertiary education, 3%. So that is that. Now, in this question, we also need to check for minimum tax. Minimum tax is 0.5% of turnover. Of the turnover years, you will bring them forward and check minimum tax. Now, where the minimum tax is more than the company income tax, then the applicable one will be the minimum tax. So let's check. What's the turnover? Turnover in the first question. In the first year, you write. Second one, you write it. Third one, you write it. And you multiply this by 0.5%. What this means is this. Multiply by the value. Whatever you have, you now compare. Let us assume that when you finish this, you have 300K. And in this one, you calculated it the other time, you have 61, you have 61.58. The higher is what the tax authority will assess the tax on. Okay? So that is that. Do we have any question? In my next class with you, we are going to be looking at May 2025. And that will be the end of company's income tax. Do you have any question?
Sir, is this company, sir?
One after the other. Any question?
This question we are solving, sir.
This is.
Sir?
I can't hear you.
I said this company, this problem you are solving is a manufacturing company, sir.
I can't hear any one of you.
Go ahead.
Sir, can you hear me, sir? Can you hear me?
I can hear you now, yeah.
Yeah, I said this question you are solving is a manufacturing company.
It's not a it's a manufacturing company.
Okay, it's a manufacturing company.
Yeah.
Okay.
But you remember, a manufacturing company, the capital house will be 100%. Okay, there is no restriction. Or even if there is restriction, it will not affect this question. Because the capital allowance is very small compared to the profits. Any other question?
Yes, sir. Please, I was wondering why didn't we calculate initial allowance on the tax written down value at the beginning?
Why would you calculate initial allowance value? What is tax written down value as I taught you in class?
Yes,
Tax
I
written down value
understand.
is equal to cost minus initial allowance minus annual allowance. So tax written down value, you do not need to calculate initial allowance again. Who asked that question? You better go back to your capital allowance and go and study it. This is question number 1 in your exam. Your examiner will always test capital allowance in number 1. And I've told you, this is the last time they are going to test this act. The next act that they are going to be doing is more complex than this one. So focus on this. Pass it.
I have a
Go and
question, sir.
study your capital allowance again.
Okay,
That
sir.
person that's asking that question, you did not
I have a
follow
question,
capital
sir.
allowance in the class. Yes, your question.
Okay, sir. Please, can you quickly explain that minimum tax to me? Because when you explain it, my network just started.
Okay, I said minimum tax will become applicable where the following occurs. Number 1,
Okay.
the company makes loss.
Okay.
Number 2, the minimum tax computed is more than the company income tax. The minimum tax will become applicable. So that's what I just said here. And to calculate minimum tax, it is your turnover multiplied by 0.5%, multiplied by 0.5% to get minimum tax.
Okay.
All right.
It's all right.
Okay.
So, sorry, I have one
In the
question.
absence of no question,
I have one question. When we
yes, go
calculated
ahead.
the computation for company income tax in 2024, was there a reason we used accessible profit instead of and not adjusted profit? I'm not sure I got
No
the
difference
difference
between
there.
accessible profits and accessible company income tax. Accessible profit and adjusted profit under company income tax are the same.
Okay.
When you get the Petroleum Profit Tax Act, that is where you will be talking about the difference.
Okay. Thank you.
All right.
Sir,
Good day to
there's
you.
one last question.
Okay.
Sir, please, upon checking the solution, they used 3% for the text for all the 3 years. So are we to follow ICAN or this exam
They
today?
cannot use 3 years, but in 2023, if you look at your past question, 2023, education tax rate is 2.5%. That's how you see the tax rate.
Okay,
And
but are they going to
at the
like
back of the question, they also put it there. Education tax rate in 2023, 2.5%.
okay, so they'll put it in the question.
Yes, it's the question.
Okay, thank you.
Sorry,
Good
sir.
day to you.
Sir, please.
Uh-huh.
Someone said I forgot to add something to the adjusted profit. Please, what's that?
Go and add it. I said you should add it. That traveling expenses, we missed it.
We do not have the
So just
traveling.
add it back. Add it back to it. So to correct the adjusted profit.
Okay, sir.
Bye.